The higher the dividends they give, the better your analysis will be also. It gives you a firmer conviction on how robust the fundamentals are. And I've been saying this over and over that it's not just about giving predictable and repetitive dividends, but it's all about also if the dividends are increasing over a period of time. For those who are into REITs and for those who are into passive income, you know that I've been a big fan of dividend investing. I've been a big fan of REITs, especially if you are similar to me that are getting older already and you somehow want to get passive income from your investments. I want to give you an update on RCR and also C-REIT, and I do believe that this is something that's relatively good news for all of you. Then I want to also talk about Filinvest, which I have not so good news also for you. Then I'll give an update on A-REIT. Then not connected to REITs, but I want to talk about PLDT as well. For all of you who have been following me for quite some time, I've been mentioning PLDT because they have been very, very consistent in giving out their dividends. But not just that, their dividends are relatively higher compared to other companies that are as big but in a different industry, but their dividend yields are relatively lower. Now, I want to start everything off with RCR, and I want to start everything off also with C-REIT. Both of them, and you can check it out, they're releasing their dividends also again right now. Do note that REITs give out their dividends on a quarterly basis, but what's interesting about RCR and what's interesting with C-REIT is that they are increasing the dividends that they are giving out. So that's a good sign. Why? Do note that REITs are required to give out 90% of their earnings in form of dividends. The fact that they are giving out higher dividends, which will in turn increase their dividend yields, speaks to the fact of how their earnings are. Because please do note that if they are not earning well, it will directly impact the dividends that they would give out on a quarterly basis. The higher the dividends they give, the better your analysis will be also. It gives you a firmer conviction on how robust the fundamentals are. And I've been saying this over and over that it's not just about giving predictable and repetitive dividends, but it's all about also if the dividends are increasing over a period of time. And that's what RCR and that's what C-REIT has actually done. Looking at it also from a technical analysis perspective, for C-REIT, what's interesting is over the past 3 to 4 months, they haven't really broken out of a specific resistance. I think mainly because that if it goes above that particular resistance level, people who are buying it may not be as attracted to the dividend yield that they would have. However, I do believe that at around 7 plus gross, it's still attractive and better than a lot of the other dividend stocks out there and a lot of the other REITs out there as well. So it's still attractive. RCR also, what's interesting about them is the opposite of what C-REIT is doing. C-REIT has gone up and consolidated over the past 3 to 4 months. RCR has been down. It's sort of consolidating also, but not consolidated in its highs, meaning for C-REIT, it dropped, then it bounced up, pushed up very high, then started to consolidate. While for RCR, it has dropped and bounced a bit, but it's still consolidating. It still hasn't gone back to where it was. Similar also to C-REIT, they both haven't gone back to where they were. Even for RCR, depending on your watching this and the stock price at that particular time, as of the time that I'm recording this, its gross amounts are about 7+% still, which is respectable, which is higher also than the ones that are considered more blue chip in REITs. Talking about A-REIT as well, they C-REIT and RCR would give you a higher dividend rate of return. So that's the good news. You have C-REIT and you have RCR giving you higher dividends, and depending on what your purchase price was, it will eventually also give you a higher dividend yield as well, and that's what we want. So if you bought it earlier and then over 5 or 10 years the revenue of the company would continue to grow, that would directly give you also a higher dividend, and maybe the dividend yield that you would receive would be very, very high as compared to the acquisition price that you had years ago. I want to talk about A-REIT. They're the first REIT that came out here in the Philippines, and given that it came from Ayala, a company that's very prestigious, a brand that a lot of investors see as something that's very stable. They're supposed to release a dividend this August, but by the time I'm recording this, it hasn't been declared yet. So I've been getting questions about it, asking about the dividends of A-REIT. I would tell them historically they would give out this period, but there's no declaration yet. So once I get more information about it, I'll try to make more videos on it and share it to you guys as well. Fourth on my list is we have Philreit. If it was good news for C-REIT and also good news for RCR, for Philreit, it's still the opposite. Their dividends are still down. If you've bought it at the IPO price, or if you've bought it also when it was relatively higher, your dividend yield right now would be probably below 4%, which is not as attractive also, given that there are bonds, there are time deposits that would give you a higher rate of return already than Philreit. So what's interesting about that, if you're looking at it vis-a-vis certain investments, if you put it in, say, time deposit, or you left it in a fixed income, you would be earning more than Philreit, and Philreit should be giving you more because of the risk that is attached to it versus something that's fixed income. However, the opposite side happened. The rental income has been impacted. I guess one of the things that you could do is also go to Alabang, the entire Filinvest area there, to be able to see, and if you want to do like an eye test on how are the buildings really full, what's happening to the tenants there, they have to shore up the rentals there before it starts reflecting also on the dividends that would be given out. So positive for RCR and C-REIT, but not as fruity for Philreit investors. I don't want to be the one that harps on this over and over, but that's the beauty of diversification, that even though if somehow maybe some of you have Philreit, but if not everything is in Philreit, you might be affected, you might be hit. But if not everything's there, you should still be relatively better off than if you had put all of your money in Philreit as well. I want to talk about PLDT. They just released also their disclosure. They just released also their dividends, and the dividends that they would give out, I believe in total for the year, is about 108 pesos per share. If you're comparing that from what they gave out last year, it's a bit lower, but I do believe its gross amount is still above 8+%. So I was expecting sana something that was higher, but they disclosed a lower amount. So what could we do? That's what it is also when you're dealing with passive investments and we're dealing with dividends, especially for common stocks. We don't have control. It's not like preferred shares where there's a specific rate that you would actually get, or it's not like REITs also that 90% of the income is given out in dividends. This one, it would really be dependent on how the company or the board of directors would declare the dividends that they would want to give out to their shareholders. That's something to note. It's still above 8% gross, but it's not as high as what they gave out last year. As a bonus, I want to add this, connected also to Manny Pangilinan MVP Group. Meralco gave a higher dividend this year at 8.52, which puts their total at 19.548. This puts their dividend to about 5.6%. It's not, of course, as high as the others that I've mentioned earlier, but for a defensive company, it's quite good. And it's quite good that they're increasing the dividends that they're paying out as well. So do note, if you've been watching my videos, my threshold is I want dividend yields to be above 5%. It would just be purely based on what they gave out in 2022. They would not have made the 5+% mark for me. But right now, as of this recording, it's about 5.6% gross, because even if the price of Meralco has gone up, but because it was compensated by them giving out higher dividends. So good for Meralco. PLDT still high but not as fruity. RCR and C-REIT is good. A-REIT, we have to wait on what they will give out this August. I'll update you on what's next. Philreit, not as attractive in terms of dividends. So if you want to know more about dividend investing, check out my dividend playlist. I have tons of videos talking about dividends, which are all for you guys as well. And if you want to know more what dividends are and a strategy that you could employ in it, I've written that in my book, Winning Strategies for Investing. That's available via the links below in Shopee. Or if you want to know more about dividends, you can check out my book, Stock Investing Made Easy, which is the most basic book that you would get in the stock market. And if you want to learn more from a seminar perspective, check out my fundamental analysis course in the description below, where you could learn about the rudiments of fundamental analysis, how you could analyze companies. And what's interesting about that is it's on demand. You can watch it anytime you want from the comforts of your home, and you could rewind, write notes, and do everything else in between. So if you stayed up until the end, like, share, subscribe, and smash the bell so you get updated every time I come up with new content about investing. And if you have questions down below, please write them down. I'll do my best to be able to answer you. So that's it for now. Marvin Kermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.